United States.
The United States.
The United States. The United States just attacked Venezuela's capital, hitting military facilities in the country. President Trump ordered this operation. There were multiple explosions.
On Saturday, January 3rd at around 1:25 a.m., the U.S. captured President Nicolas Maduro, the president of Venezuela, and his wife Celia Flores. They were flown to New York and faced drug and weapons-related charges. However, markets didn't take the headlines at face value. Most speculated that the underlying motive behind that was due to oil, and the president himself confirmed it.
We're going to have our very large United States oil companies, the biggest anywhere in the world, go in, spend billions of dollars, fix the badly broken infrastructure, the oil infrastructure, and start making money for the country.
You see, Venezuela has the largest oil reserves in the world, a huge asset to any major superpower. The US is set to run Venezuela until proper leadership takes over, and major US oil companies are set to move in and benefit from Venezuela's oil. Now, the big question at hand is, what does that mean for the price of oil and other assets? In this video, I'll address both sides of the coin: what happens if oil goes up, what happens if oil goes down, and what I personally think and how I trade it. So without further ado, welcome to my first weekly outlook of 2026. Let's get right into it. Starting off with the chart of the day, without any doubt, is going to be oil. So the question at hand that's coming after this, recent capture of the Venezuelan president and, these US companies coming in to take over is, what's going to be the price of oil and what are the implications behind it? Well, I've done some reading on my end, and just kind of speaking surface level, if there's more supply of oil available, then that's just going to bring the prices of oil down. Now, markets do not like uncertainty, and it's very much a possibility that you get a quick price surge in oil, pricing in any supply shocks that could happen, and then reverting from there, just because markets are forward thinking and they kind of tend to do that. But more oil brings the prices of oil down, right? It's just basic supply and demand. Another thing that I realized is that although Venezuela has so much oil, actually 85% of it is really hard to get. Venezuela's infrastructure is not the best, and so that's where you have these big oil companies from the US that are coming to go in there, invest, and perhaps turn that around. So until then, we may be seeing some stable oil prices, maybe a little bit of a spike when it comes to supply shocks. So what that would look like on the chart here, we do see that with oil in the daily time frame here is on this downward trend line here. So perhaps a break above this, sending it up higher here, and then it'll probably react to a level of resistance. One thing I'm just seeing off the back of my eye here, looking left, we have that 65 handle, this territory. So perhaps if there is some uncertainties going around, then oil does get a little bit of a pop up until that level of resistance, and then we kind of go from there. But honestly, this doesn't seem to be like a huge story that's going to really impact the price of oil to the upside. If anything, it brings it down lower. Now, I did see a hint of a headline this Sunday talking about a North Korea missile that was sent out, but then I believe it was shot down. I didn't see much past that, so I don't want to, I don't think that headline is quite heavy, to be honest with you guys. However, if we do see some geopolitics tension going around, then perhaps oil does go ahead and chug higher. We did see that the allies of Venezuela, so Iran, Russia, China, they did go ahead and publicly say that they did not like the act of that, and they were willing to retaliate if things escalate. I don't know how true that is. That's kind of that we get into the territory of me predicting stuff, and I don't like doing that. But if we do get some geopolitical tension, then absolutely oil breaks up out of this trend line and chugs higher. So let's go ahead and address the possible scenarios. If oil stays low, that's actually very good for equities, the inflation story in the US, right? Oil staying lower is really good for inflation. If we get oil to the upside though, and it stays elevated, that could trickle into the US economy, causing some short-term inflationary pressures that would cause the Fed to hold rates for longer. That would give a boost to the dollar and pressure equities. As far as setups go, I'm a currency trader primarily here, so I would be looking at the DXY for guidance. One thing I discussed in my videos last week here is this bearish trend line here. It seems like we did get a little bit of a pop here. If we get a break above this bearish trend line here and we stay above it, then perhaps DXY does go ahead and chug here. This Fibonacci is in the perspective of bearish people, so you have that fib from high to low, they'd be looking for a retracement into these levels. Putting ourselves in their POV, if the DXY does hold above this trend line and we do see some price action higher, then perhaps that 38.2% retracement level, the 50 and the 61.8% retracement level. I am in two positions, dollar Swiss long, pound dollar short. And so once we get into these levels, if we do, these will be my profit taking levels. If we get into this golden zone, then the bears will definitely have an opportunity to take the DXY lower, and the longer term trend continues in favor, going with the Fed lower rates for the US. Now for the dollar bulls, aka me short term here, if the DXY does go ahead and break below this level, the 61.8 retracement level, then good probability that DXY goes ahead and revisits this level of support, this longer term level of support at 96.5. If that's the case, I take a loss from my positions and I move on. As far as possible setups that I would really like, I am really looking for an Aussie long opportunity here, upward trend line here. If we break below and kind of revisit this level, that'll coincide with the DXY, you know, chugging higher and then getting into that profit taking trap there. I'd be looking for Aussie dollar longs here at the 66,200 level. Fundamentally, you have the US cutting rates, you have Aussie dollar fighting some elevated inflation. They're also looking to hike the rates, so those two, you know, opposite ends of the spectrum there is something I would really like. Participating in Aussie dollar longs would be a good attempt for me here at that 66,200 level. If I don't get that, then I missed the trade. You know, Aussie dollar is pretty elevated here. We're at this level of resistance, so trading at these premium levels relative to where we're at right now is not something I'm willing to do. Euro dollar broke this bearish trend line here, looking to get a retracement up until this level. If we just put a Fibonacci retracement level from that low to high on the euro dollar, that's going to line up right there with that 38.2 50% retracement level. If we put it from this low, then it's right on the money there. So waiting for a pullback on the euro dollar to go ahead and play the longer term dollar bearishness move. Pound dollar, same idea as the euro dollar. This was the better option of the two for me, in my opinion. Pound dollar's struggling with some growth on their side, and they also have some budget things that they have to sort out. A lot of uncertainty surrounding the pound sterling, so this was the better one of the two. We broke this trend line here, so I'm looking for a retracement back into this 38.2% retracement, perhaps the 50. These are where I will be taking my profit if we do get there. Stops are above the highs here, so if the DXY does go ahead and break that 61.8% retracement level, most likely than not, pound dollar is going to take out this wick here, this daily wick, and I'll be taken out on a loss for that one. New Zealand dollar, unlike the Aussie dollar, it actually did go ahead and break that bearish trend line. I'm going to see how far we can go. Same concept. The cool thing is that most of the major forex pairs are pretty much correlated, or not correlated, but they're moving pretty well together in sync. New Zealand dollar already hit that 38.2% retracement level faster than the other ones, faster than pound, euro, and Aussie. So perhaps we get a deeper retracement if that is, or this is just a good support level and then this thing goes higher. Dollar yen has a little bit of a momentum here. I do think it's going to just chop its way up here up into the top. However, once we do get to these levels, you do have that risk of verbal or actual intervention from the Bank of Japan. Again, they're looking to hike the rates. They are considerate of what's going on in the world and the implications behind fast hiking. So perhaps they are patient in that regard. And once we get up to these levels, then they can go ahead and act on that. A Bank of Japan rate hike will go ahead and disrupt carry trades. It will make the rate divergence between the US and the yen narrow, and so that can, you know, have some longer term implications. Perhaps we kind of start changing the direction, because again, you do have the Bank of Japan hiking rates while the US is lowering rates. So it's going to narrow, you know, as that starts to happen, similar with the Aussie dollar. Perhaps a good short trade later in the future. Dollar Swiss is a contrarian play that I had for some time here. I entered it here in this level during December, just because it was really quiet, wanted to collect some income. It is kind of, you know, bouncing off here of this level of support, but I don't know if it's going to really hold or not. If we make our way back down here and we kind of break below the 78,500 level, then I'm going to cut the trade for a loss. Hopefully the carry, you know, positive swap that I've accumulated during the time does offset some of the loss, or hopefully all of it. But if it actually does kind of take a pivot and we kind of trade higher here, maybe up into this level of resistance, to now have some profits plus some good swaps, that'll be the best case scenario for me. Dollar CAD, not a trade that I'm really looking at. I don't like the chart here. Haven't been paying too much attention to it. One thing I will say though, if we do get dollar CAD to kind of drift higher here and that DXY does start to set up for some short trades, I think this will be a really good opportunity, given that this was a level of resistance for a long time previously, you know, 1, 2, 3, 4, 5 times here. So perhaps if we find ourselves back up there, that'll be a really good solid zone to short from. That's actually going to be something I'll keep on the back of my mind. And that's it for my setups goal. Going to be watching the yields here on the 10-year yield and the 30-year yield. We do have the 10-year yield slightly elevated. So remember, we had to push lower here at that FOMC dovish comments here. And we've now found ourselves back up, completely reversing that move back up into the 4.2s. Curious to see how it opens. If we pop above this level here, if this level of resistance, and we continue higher, then that means the bond market is not really in line with the Fed rate cut narrative. Perhaps they, think that the dollar or the rates are going to stay higher for longer, and that'll be good for the dollar. So something to definitely keep in mind of. You don't want to ignore the 10-year yields. And that's about it, guys. Oil CFD is just opened up here. Not much action here, so we're going to monitor this throughout the week. I'll definitely cover it. As I make my videos throughout the week, I do plan on producing content Monday, Wednesday, Friday. So I'll be sure to bring you guys the latest. Thank you all so much for watching. I truly appreciate it. As always, trade safely, guys. Have a blessed rest of your day. Bye-bye.